Alright, brother. This is gonna be first video talking about the basics of market structure. So pretty much you know absolutely nothing about how or why the market moves the way it moves. So I'm just gonna clarify that for you real quick. So you need to understand that the only reason why the market moves is through um, the buying and selling of contracts between other people. So when you see price move up and down, that's attributed to nothing except for buying and selling. All right. So as long as there's people buying and selling contracts within the market, price will fluctuate. Okay. There's nothing else. There's no news that comes out. Nothing that actually moves the market. Stuff like that, news and stuff, that could influence buying and selling, but nothing moves the market except for buying and selling. So after knowing that, the second thing that you need to know about the reason why the market moves is through volume. So what volume is essentially the same thing as buying and selling, except it's just the volume of buying and selling, right? So if you could imagine there's only a couple people buying and selling contracts, the market's not going to move much, right? But if you have a whole bunch of fucking people buying and selling, the market's going to move because there's a lot of volume of buying and selling within the market. So now you know why the market moves, which is through buying and selling, and it moves through the volume of buying and selling. All right, so you need volume to get movement from the market. So that's just a little clarification to understand like why the market moves, because we never figured that out before. But yeah, just know that it's simple. It's just the buying and selling of contracts. And then now, so we're gonna talk about market structure. So you need to understand how to actually read what the market is doing. So there are three different market conditions. All right, there's gonna be uptrend, uptrend, or bullish. Means that means that we're going up pretty much. Let me make that shit bigger. Boom. The second one we have is a downtrend or bearish. You know, you see in the um, Wall Street, the bulls and the bears and shit. Bearish means down, bullish means up. And then in the middle, we have what is called ranging. And ranging is when it market is just moving within a range. There's no movement, essentially going higher and higher or lower and lower. It's staying within a certain range of price. So just to illustrate for you, this is what an uptrend looks like that. This is what a downtrend looks like. And then this is what ranging looks like. Alright. So as you can see here, obviously price is going higher here, price is going lower here, and then ranging price is really going nowhere. It's just staying within these parameters here. What I want you to pay attention to here is these points here. Alright, so these are what we call highs and lows. Alright, so when price creates a high, obviously it's a high, and when price retraces or goes lower, it creates a low. Alright, when it comes specifically to uptrends, you're going to have price create a high and then a low, and then what it's going to do after is going to create a higher high and then a higher low. What defines these higher highs and higher lows? It depends on the previous highs and lows. So obviously this high is higher than this high, correct? So that's going to make it a higher high. This low is higher than this previous low, so that's going to make it a lower low. When you see structure forming out like that, what you're watching is an uptrend forming. So this is what I want you to pay attention to. This is the most important thing of this video is you need to be able to um, realize these higher highs and higher lows, or what we're gonna get into with the downtrend, lower lows, lower highs. So downtrend, when we're going down, price creates a low, then it creates a high, and then or this is considered a higher low or a lower high already, because the high is lower than the previous high here. And then what price is gonna do after is gonna create a lower low and then a lower high. Why are they called lower low, lower high? Because look here, this low, this swing point here is lower than the previous low here. All right. this high is lower than this high here. All right. So it's very important. This is how you identify what we call trend, like downtrend and uptrend. This is how you, all of this, these three things, they're encapsulated into what we call market structure. So it's very important that you obtain the ability to um, define market structure and understand what kind of market you're trading in. Reason why this is important is because if you know that the general sentiment of the market is to go up, you know it pays to understand that and use it into your favor. That doesn't mean all the time that if price is gonna go up, that you're only gonna be buying or betting for price to go up. Because obviously you see here these legs that retrace, but we'll get into that later. So just focus right now on being able to identify, hold up, what trend we're in by understanding what these swing lows and swing highs mean. All right. So like I said before, we have a low here, and then we have a, let's do it here. We have, it's too small. We'll do that. I have a high. What the hell? High. And then we have a low. And then here, this is the higher high. And this is the higher low. And then here we have another higher high, obviously. So this, sorry, this shows an uptrend because you're creating higher highs and higher lows. All right, understand that. Ranging, obviously, these are what we call equal highs, equal lows. Whenever price retraces to the same level as the previous higher low, which you call equal high, equal low. So here, low, have a high. These are considered lows and highs just because they haven't been broken yet, right? So these are the initial highs and lows. Now this one is going to be a lower low because we have broken through the previous low. This is lower high because price printed this high lower than the previous high. Lower low. All right. So what doing being able to see this, like I said before, you're gonna be able to understand the general idea of where the market is gonna be going. All right. So what I want you to do, I'm gonna give you my login to this. It's called TradingView. It's a charting platform, and I want you to go on like a market and then identify trends for me. This is just the basics of market structure. We're not completely done with it yet. I just want to give you a quick video, something for you to think about. Just so like when you look at a chart, you're gonna be able to think about something like, oh hey, maybe we're in a downtrend or uptrend. But yeah, so this is just the beginning, bro. I don't have much time right now, so I just made this quick video. But later on, I'm gonna get into more stuff like structure breaks, which it just elaborates on how higher highs and higher lows, stuff like that, how they're made. I'll get into these zones and stuff like that. But first, I really need you to understand how market structure works and being able to identify higher highs, higher lows. So what I want you to do, I'll give you an example here. I want you to just go on a just pick a market. I don't know. You can just do the S&P 500 or ES, like the market we used to trade. Go on the daily chart. This is the Nasdaq futures, the daily chart. And what I want you to do is use this tool here on the left that you see me, the path tool. You'll see it. You press. It'll be on the brush first, but just go here and go onto the path tool. And I want you to mark up for me a trend, you know, and I want you to um what is it called? I need you to label each point, each swing point, and tell me whether it's a higher low, lower high, this, that, and then tell me what kind of trend we're in. Are we in a downtrend? Are we in an uptrend? You see here? So you see how we have start up here, we go low, we have a high, and then we have a lower low. Why? Because we break below the previous low. And then here we have an equal high that pushes down into a lower low. And then we have another lower high, lower low, and then here you see how price breaks above this high. So we create a higher high here. So this is what I'm gonna get into next time with breaks of structure and in zones and volume and stuff like that. But for right now, I just want you to focus on being able to identify trend, and I need you to, I don't know, send me like 5 different screenshots of you being able to identify the trend. I want to see different ones of send me a bullish trend, bearish trend, ranging market and stuff like that. But send me any questions you have, bro. Please ask a lot. Like I need you to ask some questions if you're confused at all. But love you, bro. Enjoy the video.